From a simple smartphone chip designer into an essential platform for the entire AI industry. Yes, in this video, I'll talking about ARM. When I mention about ARM, what comes first in your mind? Comment below and let's begin. ARM have fallen for 40% before they bounce back up for roughly 20%. Is this a they can bounce or a reversal? So let's first look into their latest quarterly earnings. So at first glance, the number looks really good. Total revenue hit 1.24 billion, up 26 year over year, but that's not the headline. The real story is the quality of that revenue. Their revenue actually slowed a bit last quarter, but their royalty revenue accelerated 27%. So this is a huge deal. It means ARM's strategic shift to higher value design is paying off faster than expected, and they are making more money from their existing footprint, which is a sign of a powerful maturing business. To understand the shift, you need to see how ARM now see itself. So they have reorganized into three distinct AI-focused business units. First, Edge AI, which is the smartphone, Cloud AI, which is the data center, and Physical AI, which is for the car and robots. This isn't just a name change, it's actually a strategic declaration that they are now targeting each and every corner of the AI market. And now let's break it down each pillar, alright? So first, Cloud AI is the new king. So this is the new engine for new ARM. For the second quarter in a row, data center royalties are growing over 100%. It's doubled year over year. This is explosive. Management now expect Cloud AI to become their largest business segment within the next 2-3 years, overtaking smartphone. Why? Because every major cloud player, Amazon, Nvidia, Microsoft, Google, is ramping up custom ARM-based chip. The reason is simple. ARM architecture has a 50% power efficiency advantage. This is very essential in a world of power-hungry AI. Efficiency is everything. Next, the secret weapon is CSS momentum. So how is ARM making more money from smartphone even if the volume are flat? The answer is the compute subsystem, which is CSS. This is where ARM does more of the design work for the chip maker, and in return, they get much more higher royalty rates. So in just one quarter, CSS as a percentage of royalty jumped from 10% to nearly 17%. And the most incredible stat, the renewal rate for CSS is 100%. So once customers are in, they don't leave. This is clear signs of ARM pricing power. So we are about halfway through, and I have to ask, what is the biggest risk you see for ARM right now? Let me know in the comments. So now let's address the biggest bear case, the slowdown in the smartphone market. Management tackled this head on. They stated that even if the smartphone market were to decline by 15 to 20%, the impact on ARM total royalty revenue would be a tiny 1 to 2%. This is because the decline is in low-end phone, where ARM makes very little money. The high-end, where AR-V9 and CSS design dominates, remains strong. The smartphone risk is officially contained. So while Cloud AI gets the headline, the physical AI segment is quietly building a powerful mode. This quarter, we saw a huge validation. Rivian announced its next generation autonomous car or autonomous computer is powered by custom ARM chip. This is the first production vehicle to use ARM advanced V9 architecture. With the automotive and robotic market set to explode, ARM is positioning itself as a safe, efficient choice for this critical system. A major concern for investors was the massive ownership stakes held by SoftBank. That concern was to put to rest this quarter because CEO 𝐟𝐸𝐻 has quoted SoftBank founder Masayoshi Son is not interested in selling one share of ARM stock. So this removed huge overhang. On top of that, SoftBank is paying ARM a steady $200 million per quarter for licensing and design service related to their own massive AI project. So this is durable, predictable revenue stream. Looking ahead, guidance for the next quarter shows a typical seasonal slowdown, but management confidently reiterate their expectation for 20% growth for the full fiscal year 2027. They also lay out the key risks, and as we have discussed, most are well contained. The biggest risk is really about execution. So this quarter packed with 8 exceptional items, from royalty accelerations to the 100% CSS unit, all point to the business at a major inflection point. So there's 3 things every investor must watch right now if you are looking into ARM. First is the cloud AI growth sustainability. The company must continue to deliver like at least 80 or even close to like 100% kind of like year-on-year over growth to justify its valuations, because they are right now sitting at price to sales like 30 over-ish. Second is the CSS penetrations. You need to watch the percentage of royalty coming from CSS to be closer and the path to 50%. So this is the path to higher margin and higher pricing power. And the most important focus area of all is the March 24 2026 strategy event. This is the big one, and management has been hinting that they are ready to move beyond just licensing. And on March 24th, it's widely expected that ARM will announce a strategy to sell chiplets or even complete system on a chip design. This would be a fundamental expansion of their business model, increasing their addressable market by an order of magnitude. So it's the ultimate catalyst that could unlock the next phase of growth and justify the stock premium valuation. So what do you think about ARM? Is ARM having an irreplaceable mode, or with the growth at different, like from cloud to AI to physical, is the pricing power proven? And if you think so too, what do you think that ARM will announce on the March of 24th? Share your thoughts, share your view, comment below. And if you like this video, hit this video like. And if you have not followed the channel, please subscribe to the channel. And we also have our Telegram group. If you are a very heavy Telegram users, we will share our update in Telegram as well. So see you in the next video.